So we are seeing quite a bit of merger and acquisition activity in the real estate sector. It's seeming to heat up really quick out of nowhere. We'll get into one deal that we're watching in just a second. Before we do, please take a minute and check out the link you see on your screen for a message from our sponsor, The Motley Fool. You can get the top 10 stocks to buy right now, and it's the best way to support this work that Tyler and I are doing. So, two healthcare REITs that I have been following for some time, Healthpeak Properties and Physicians Realty Trust, are merging. Now, technically, Healthpeak is the acquirer because they're going to be keeping the Healthpeak name after the transaction's done. But it's being structured as a so-called merger of equals, which might sound odd, being that Healthpeak is several times the size of Physicians Realty Trust. But basically what this means is that the acquisition conversion rate, meaning that Physicians Realty shareholders are going to get new shares of Healthpeak when the deal's done, is based on the current stock price and not one paying a premium for another. So it's kind of like, think of this as Healthpeak is absorbing Physicians Realty Trust, not that it's buying it. So again, all stock transaction, Physicians Realty Trust shareholders will get 0.674 shares of Healthpeak for each share that they own right now. And interestingly enough, and this kind of goes with the merger of equals theme, they're keeping the Healthpeak name, but they're keeping Physicians Realty Trust stock symbol, DOC, which is, let's be fair, probably the best stock symbol you could have for a medical REIT. So I see why they're doing that. But so it is being structured as a merger of equals. Neither stock moved tremendously on the deal. The debt is just going to be combined. The property portfolios are going to be combined. Healthpeak invests in medical office properties and life science office properties primarily and has some senior housing. Physicians Realty Trust is exclusively a medical office REIT. Most of its properties are medical offices that are affiliated with major health systems or actually on campuses of major health systems. So, Tyler, what do we think about this deal? Do you like this one? Do you not like it? Do you think it makes a difference? Or what's your take?
So we mentioned my take on this one is not too far afield from another acquisition that you and I talked about in another video related to Realty Income and Spirit Realty. With it being a merger of equals, there's not a lot of huge upside that I can see from this deal. It doesn't look like Healthpeak is buying this huge, pipeline of development properties at Physicians Realty Trust or anything like that. Both of them, from a debt perspective, more or less the same in terms of their financial burdens, in terms of how much their debt is being termed out, like basically meaning how much they have to repay or refinance each year. The interest rates that they're getting are more or less the same. And this was the interesting part to me, at least in the press releases and the announcements that they made related to it. They said as part of it, it was going to be accretive, would mean it to funds from operations. So I'm like, well, yeah, duh, you're getting bigger. But what was very strangely absent from the entire announcements was it's not necessarily accretive to funds from operation per share. So there's part of me that says like, well, if it's not even accretive on a per share basis, then you're just getting bigger to get bigger. Yes, they said there's some synergies that they say they can wring out some cost effectiveness, something about like $40-50 million per year, which I think on the combined portfolios maybe 2 to 3% on a per share basis. So okay, sure, that's okay, but like the other merger that we saw with Spirit Realty and Realty Income, this one, Healthpeak and Physicians, it really looks like the same approach that I mentioned on the last one is we're getting bigger, we're getting to have a more diverse portfolio, to have a larger portfolio. So when it is time to refinance our debt, we're going to look more attractive when it comes time to refinance. We're going to have a larger, more diverse tenant role. Maybe our lease a weighted average length of lease, meaning like how far into the future those leases are coming due. That's going to look more attractive. Basically, all I'm trying to do is find a way when it comes time to refinance my debt that I'm going to have a better credit rating, such that when I refinance my debt, I can get as good of a cost of capital as possible. Now, this is from my perspective, I'm one of the camp of like, we're probably going to be in a interest rate environment not too dissimilar to where we are right now for the next couple of years. And so if I'm one of these companies and I know that I have to refinance debt in the next 2 to 3 years, my cost of capital is going to go up significantly. And because of that, I need to get big, I need to get diverse, I need to find a way so when it comes time to refinance, I can have as much advantage as possible in reducing my cost of capital. And this to me feels like the reason why they're doing a deal like this. Uh, Other than that, right now, like again, I said, from a pure shareholder perspective right now, it doesn't, it's kind of meh. And all things considered, I haven't necessarily been impressed with Healthpeak Properties recently. Low returns on capital, one of those companies that like doesn't ever seem to get out of its own way in terms of legacy asset issues, capital allocations issues. So all of those things combined, I was like, whatever. But if you can get big enough in this upcoming period, then perhaps it's not a deal that makes a lot of sense right now. But 2 to 3 years from now, when other people are having to go refinance and they're in capital trouble, maybe that's what's going to make these companies look better in the long run.
Yeah, and I agree with you that I have not been terribly impressed with Healthpeak. I've significantly reduced my position in Healthpeak in the past year or so. I like this deal, one, because it does create some cost efficiencies. We'll have to wait and see because the word synergy gets thrown around a lot when it comes to mergers and acquisitions, and it doesn't always pan out. And like you said, I haven't been terribly impressed with Healthpeak's management, so I'm taking it with a grain of salt when they say it's going to be 40 million in cost savings in the first year. So I like this better from the perspective of if I were a Physicians Realty Trust shareholder. And the reason I say that is the biggest problem I've had with Physicians Realty stock in recent years is its ability to grow. The medical offices are not a very exciting type of property. The big thesis with that company was their ability to grow by leveraging their relationships with health systems and make accretive acquisitions of properties over time. Well, first the COVID pandemic happened and they weren't able to make acquisitions because they just pumped the brakes on growth. I get that. Then the interest rate environment got to the point where it didn't make sense to make acquisitions at all. And when I interviewed their CEO on Fool Live not that long ago, I want to say right in the early days of the COVID pandemic, and the company was targeting something like $1 billion a year of acquisition volume, and said they saw about a $300 billion addressable opportunity. And they're a very small company, so that was the thesis. It wasn't that their medical office properties are going to generate outsized returns all by themselves. That's not the case. A portfolio of medical offices is generally going to underperform the market. When you just consider rental income and things like that. And being effectively absorbed by Healthpeak makes it a growth story again from the perspective of a Physicians Realty Trust shareholder. Because one, Healthpeak has a more diverse portfolio. They have two major life science developments underway with impressive pre-leasing activity, just to name one example. And it just kind of opens up the possibility of growth a little more than we saw previously, just because they have more avenues to do it. So again, if I were a Healthpeak shareholder, which I am, I would be in the meh camp. If I were a Physicians Realty Trust shareholder, I would like this deal a whole lot more. Physicians Realty Trust trades at, I think, 11 times earnings right now. It's a very cheaply valued stock because of its essentially pricing in zero growth. So this kind of brings a little bit of growth back into the thesis. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.